Hi everyone, and welcome again. Thanks for joining. We'll start in a couple of minutes while people are still coming up. For those who don't know me, I'm Alfonso. I'm co-founder of Wisecost. I was with you in our last session. I have to say we're really happy with how this series is going. The response has been great, and yeah, it's nice to see many of you coming back. While we wait for a few more people to join us, just a quick heads up. We have some announcements coming soon. We're going to extend this series with new webinars, new topics, and we are also planning an in-person event in November to close this series. So we'd love to all of you be part of this. So stay tuned. You can follow in our social media and LinkedIn, and yeah, happy to be here again with you. Hi everyone again. For the people that just came here, we are just starting in 1 or 2 minutes. We are waiting for other people to join this streaming. Thank you for being here again. Okay. I think that we can get started already. Let me officially welcome you all. We are very happy to be here again. Thank you all for being here. This is the session 2 of the DCAA Ready series. Before we start, I want to thanks to all our partners who made this series possible, to Station DC, Mission Cultivate, Wendroff Associates, and Dunbar Consulting. They are supporting with all this community we are building. For those who are new, the DCAA Ready is a free series. It's a practical series about getting your accounting ready for DCAA. It's built and designed for small and medium government contractors and for the CPAs who work with them. A few quick things before we begin. We'll keep this in about an hour, probably a few minutes less. So please feel free to drop your questions in the chat at any time, and we will take them in the moment or at the end of the webinar. And yes, we are recording this session, so everyone who is registered will get the recording and the free template of the chart of account we mentioned in the emails. So here is what we'll cover today. First, we will start with a quick recap of session 1 for anyone joining for the first time. Then we'll talk about what a chart of account is and why is the foundational of a DCAA compliance setup. After that, we will talk about how to structure this chart of account in different cost pools and how to classify the transaction correctly. To finish, we will do a practical part. We will talk and show you how this is important for allocating indirect cost and how it looks in QuickBooks and in Wisecost. And then we will share a free chart of account template that you can use right away. The goal here is simple. We want you to leave today knowing exactly where to start. Let me quickly introduce who you hear from today. First, Sarah Sun. She was with us last and in our first session. She did a great presentation about DCAA. She works with government contractors on exactly this, getting their books ready for an audit. She'll walk us through the chart of accounts and the different cost pools. And also we have here Brian Wendroff. Brian is a CPA. He's managing partner at Wendroff Associates, and of course, he's my co-founder at Wisecost. He'll talk us into the platform, and we'll talk a bit about how to allocate indirect cost in the different contracts and how we can do this in a very practical way. And I am Alfonso. I'm co-founder also of Wisecost. I'll be here moderating and answering questions that you may have. So let's get started. I'll pass it over to Sarah, who will kick off with a quick recap of session 1. Sarah, over to you.
Yes, thank you so much. Thank you, Alfonso. Hi, everyone. I'm Sarah. It's great to be back for our second DCAA Ready webinar. Before we dive in, I would like to start with a quick recap of what we covered during our last session. And if this is your first webinar with us, welcome. The recording from session 1 is available on the Wisecost website if you would like to watch it afterwards. So during our last session, we introduced the DCAA, the Defense Contract Audit Agency, which audits government contractors and evaluates whether their accounting systems can properly account for government contract costs. We discussed SF 1408, which is the government's pre-award accounting system checklist that the contracting officers and DCAA use to determine whether a contractor's accounting system is adequate before awarding certain types of contract. We also walked through the labor distribution process, since labor is typically the largest cost element and one of the most heavily audited area for many government contractors. And today, we are going to build on that foundation by focusing on one of the most important components of an adequate accounting system, which is the chart of accounts. We will look at how it is structured, how it organizes costs into the appropriate cost pools, and why it is the foundation for the indirect cost allocation. So, what is the chart of account? Next slide, please.
Yeah.
Our chart of account is simply the master list of every account in your accounting system. So basically every invoice, every payroll entry, every bill or journal entries will eventually get posted to one of these accounts. You can think of it as the following system for every dollar your business earns or spends. For most businesses, the chart of accounts is designed primarily to produce accurate financial statements and tax returns. But for government contractors, there is another requirement. So their accounting system also needs to produce the information the government expects during contract administration and audit process. That's why a government contractor's chart of accounts is designed to enable the following abilities. For example, separate direct and indirect costs, identify costs by contract, keep unallowable costs separate, and organize costs into appropriate cost pools for indirect cost allocation. One question we often hear from the companies that are new to the government contracting field is, why can't I just use the same chart of account we've always been used? The answer is that the government contracting requires much more detailed cost tracking. So the government wants to know not only how much you spend, but also what you spend it on, which contract benefited from the cost, and whether that cost is allowable under the contract. That is why you will often see many more accounts in a government contractor's chart of accounts than you would normally see in a typical commercial business. Having more accounts isn't really the goal. The goal is to be able to organize those accounts in a way that makes reporting accurate and consistent. And that is why the structure of the chart of accounts is so important. So why does all of these matters? A well-designed chart of accounts makes the day-to-day bookkeeping much easier. But more importantly, it makes your accounting system capable of producing those reports the government expects, which will include the following functions that are: number one, cost segregation. So basically, the accounting system needs to be able to separate direct costs, indirect costs, and unallowable costs. All of them need to have their own accounts, which will make it easier to identify which costs are billable and which are not. Secondly is the cost pool structure. So the individual accounts are grouped into indirect cost pools, such as Fringe pool, overhead pool, and G&A pool, general and administrative pool. These pools will be later used to calculate indirect rates and allocate shared costs across contracts. And the third one is consistency. So basically, DCAA would expect a similar cost to be treated consistently over time. So for example, if a project travel is classified as a direct cost today, it should continue to be treated the same way under similar circumstances in the future. So next slide, we can see what a DCAA compliance chart of account looks like. So basically, at first glance, it's just a long list of these accounts names. Actually, the balance sheet section is pretty similar to what you would normally see in most businesses. It will start from assets, and in our template here, starting from account number with 1. It will include the regular accounts such as bank accounts, accounts receivable, unearned revenue, or say assets. And then it will follow by liability accounts, which right here starts with account number with 2, which could include accounts receivable, accrued expenses, and other type of different liabilities like payroll liabilities or line of credit. And then it will be followed by owner's equity, retained earning or owner distributions with account number starting with number 3. So this is the balance sheet accounts. But what really makes a government contractor's chart of account different is the structure of the income statement accounts, which we will see more detail in the next slide. So right here, we have the screenshots of the income statement accounts under a DCAA compliant chart of account. You will notice that many of those account names look familiar. For example, medical insurance or 401k contribution, Social Security or Medicare tax, as well as travel expenses. So those individual accounts then will roll up into a much smaller number of cost pools. For example, you can see the medical insurance, payroll taxes, PTO, and 401k are all rolled into the Fringe benefit expense pool. You will also notice that some of the account names appear more than once. So travel will be a good example. You can see travel under different cost pools, including a direct travel under direct pool, overhead travel under overhead pool, and then G&A travel under G&A pool. This seems a little redundant, but actually these are separated because the same type of expenses can belong to different cost pools depending on the purpose of the expense. We will look at a few examples in a few minutes when we talk about the transaction classification. Overall, we can think of the chart of accounts as the detailed building blocks, while those cost pools are the summarized buckets that DCA ultimately evaluate. So now that we see how those individual accounts rolled into cost pools, let's talk about what each of those pools actually represents. I think this is really the heart of today's session. So basically, rather than organizing expenses by department or vendor, the government contractors would organize expenses into cost pools. The 5 major pools are direct pool, Fringe pool, overhead pool, G&A, general and administrative pool, and then unallowable pool. This structure exists because it supports the SF 1408 requirement for segregating costs between direct, indirect, unallowable costs, accumulating costs under general ledger, as well as allocating indirect costs logically. So we can take a closer look at each of these 5 cost pools in the next slide. So to start, we have the direct cost pool. Basically, these are the costs directly traceable to a contract. For example, a direct labor or subcontractor to work on a specific contract, or a direct material on a specific contract. And then we have the fringe expense pool, which will include basically employee benefits. So the examples are health insurance, payroll tax, 401k, or PTO, holiday or sick leave. So those costs generally would benefit all employees. Next, we have overhead pools. So basically, overhead supports the contractor performance, but it cannot be traced to one specific contract. The examples can include project supervision or office supplies used by technical staff. Some contractors will also have a separate pool that you may be familiar with the name, which is called facilities expense pool. The facilities expense pool is actually an intermediary pool for costs like rent, utilities, building maintenance, as well as depreciation. So those costs will eventually be allocated between overhead and G&A pools based on how the facility is used. So that's more like an intermediary pool, or adjustment will be needed later. And then the G&A pool, general and administrative expense, which basically will support the company as a whole, which could include the accounting or executive salaries, legal, HR, or say general business insurances. These costs basically support the overall operation rather than performing the contract work. There's one question that we get all the time. What is the difference between a overhead and G&A? So the easiest way to remember it is that the overhead would support performing the work, while G&A will support running the business. And lastly, we have the unallowable expense pool. So the examples for expenses under that pool will include entertainment, alcohol, lobbying, or fines and penalties. These costs can still be recorded to your accounting system. They are just simply kept separate because they can be billed to the government. That's the other reason that the chart of account is so important, because it makes it easy to identify and separate those costs before they are ever included in the government billing. Now that we understand the cost pools, the next question becomes, where should each transaction go? Once you have the chart of account ready and you're about to enter a transaction, you can ask yourself a few simple questions. First of all, can this cost be directly traced to a contract? If so, then that will be a direct expense. Or is it an employee benefit? If so, that will be a fringe expense. Does it generally support contract performance? If yes, that will be an overhead expense. Or does it support running the company? That will be a G&A expense. Or the last question, is it a cost that cannot be charged to the government? If so, that will belong to the unallowable expense pool. Okay, so now let's look at some examples here. Some expenses are pretty straightforward for classification purpose. Basically, say if you have a direct material purchased specifically for a contract, then that's a direct material under direct cost pool. Or if the employer is paying medical insurances for their employees or making 401k match contribution, that will be the fringe expense pool. Or say if you pay CPA fees to do the accounting or you pay legal fees for general business support, those will go to the G&A pool as accounting fee or legal fee expenses. I would say most expenses will fall into these easy categories. Well, in the meantime, there are some other expenses that would require a little more judgment. So we have here business meals, travel expenses, or labor costs. I would say travel is probably the best example. So let's say if there is an engineer travels to a customer's site to perform work required for contract A, then that travel is direct travel because it clearly benefits one contract. If we change the situation, say a project manager travels to visit several active contracts and supervise employees working on those contracts, that same travel expense will now be an overhead travel expense because it is supporting the contract performance across multiple contracts rather than just one specific contract. And one more example is if it's a CFO travels to attend a management meeting or say meets with the company's CPA or the banker, then this travel will generally be G&A travel expense because it is supporting the business as a whole rather than performing any contract work. So you will notice that actually nothing changed about the expense itself. It's still an air ticket, it's a hotel, or just a regular travel expense. The only thing that changed here was the purpose of the trip. And then they will be categorized to different cost pools. And the business meals is actually classified in a similar way as we just explained for travel expenses. A good rule to remember whenever you're unsure about the classification or cost pools are, don't ask yourself, what did we buy? Instead, ask yourself, why did we incur the cost? The answer usually will tell you which cost pool it belongs to. Basically, it's the purpose of the charges. And labor could also be a good example. So basically, one employee could spend part of their day working directly on a contract and another part attending an internal training, and then another part of the day preparing proposals. Each of these activities benefits something different. So the labor cost needs to be split across those different pools. That's exactly why labor distribution will be also a super important part of a DCAA compliant accounting system. Speaking of labor distribution, I would say let's finish with a quick refresher on how the process works. We already covered this during our last session in detail, which is the labor distribution process. A quick refresh here, it will start with employee to record all of their time for the day, not just the billable hours. And then the supervisor will review and approve the timesheet. Next step, the payroll will be distributed according to how employees actually spend their time. And then the labor cost, or say wages, will be recorded to the accounting system through journal entries to different cost pools according to the labor distribution, which in this case could include a direct labor under direct pool, or say overhead labor under overhead pool versus a G&A labor under a G&A pool. Okay, so we talked about how to structure a DCAA compliant chart of accounts and how transactions would flow into different cost pools. Next up, we're going to see what that actually looks like in practice. And I will hand it over to Brian to show you how this works in QuickBooks and WiseCost. Brian?
Thank you, Sarah and Alfonso. Yeah, thank you. Hi, everybody. As Sarah said, having a good chart of accounts and an understanding of cost pools provides a solid foundation for a government contracting accounting system. It will allow a government contractor to classify transactions into the correct accounts and review financial statements with confidence. However, to be DCAA compliant, additional steps still must be taken. The additional steps are to have a time entry system that allocates direct labor to a contract or to an indirect labor cost, and to be able to allocate indirect cost to a contract. Unfortunately, QuickBooks does not assist with these steps. It does not have an auditable and automatable labor distribution process, and it cannot allocate indirect cost to a contract. This is why many government contractors, as they grow, eventually have to transition to Deltek or Uninet, because at the core of these tools are a labor distribution process and an ability to allocate indirect cost to a contract. WiseCost, though, solves these problems, and it layers on top of QuickBooks Online. I will show you WiseCost shortly. I'm going to show you the importance of a good chart of accounts and using cost pools to assist with the labor distribution process and the allocation of indirect costs directly to contracts. First, I will show you QuickBooks from the perspective of an ordinary business and how that business would view its income statement or profit and loss statement. Let me share my screen. Right here is a profit and loss or income statement in QuickBooks. It's from the date of January 1st to March 31st. You can see that it starts with revenue up top. And then underneath it is direct labor or a direct expense. It has nothing in it, which I'll show you, we're going to talk about shortly. And then it has indirect costs, such as G&A labor and legal and professional fees. So it has expenses in the middle, and then in the bottom is the profit, or what you call the bottom line. This report is a very useful report. It shows you how the company is performing as a whole. But what it doesn't show you is how each one of your contracts are performing, or the costs directly related to a contract, whether they be direct or indirect cost. So if I show the display column here and I choose class, I then can create something called dimensions. And in these dimensions, it now breaks it down and gives you a little bit more insight into how each one of your contracts are doing. Now, instead of looking at this one column, it breaks it down to many columns. You can see in contract 1, it has the revenue up top and no direct labor, which again, I'll show you shortly. And then contract 2, contract 3 show their allocations of revenue and expenses. And then on the right-hand side, you'll see a G&A labor and indirect expenses. Unfortunately, as I said, QuickBooks Online does not have a way to allocate labor directly to a direct cost or an indirect cost. And that's where Wise Cost solves that problem. So let me just show you Wise Cost. Right here in Wise Cost is, in this section here, this is called the timesheet section. And this timesheet is from March 1st to the 15th. We have 4 employees here. Their time has been approved, and it shows the hours they spent in the pay period. It shows you the tasks they worked on, or the number of tasks, and the number of contracts or indirect labor cost categories. Now, what I'm going to do is after I look at this and I say this is ready for approval or ready for the labor distribution, I go to the labor distribution section here. And I look for the March 1st to the March 15th labor distribution, and I get ready to review and adjust the labor distribution journal entry. So if I click this, you can see, looks similar to the time entry section where it shows the employees. It does show, though, how much each one of them get paid in the pay period. Here, it shows the total number of hours they worked in the pay period, and it shows how much their hourly cost is for each one of those hours. Over here, I can make adjustments if I wanted to, such as like a bonus or reimbursing an employee. But once it looks good, I'm ready to review the labor distribution journal entry. So if I click this, up top, it starts with how many employees are in the labor distribution journal entry, how many hours the employees worked, and how much the total labor cost was for the pay period. If I scroll below, what you're seeing is a large journal entry. And what it does is it breaks down each one of these employees' time that they spent on a contract or an indirect labor cost category. What you're seeing here is something before Wise Cost that we had to do manually. In the past, we used to use a spreadsheet for this, and we had to look at, when we work with a government contractor, what time entry system they were using, which was probably not DCAA compliant because it couldn't do this labor distribution. And we had to take whatever time was spent from those employees on those contracts and go to the government contractor's payroll system, find out like ADP or paychecks, find out how much they got paid, and then put this information into a spreadsheet to allocate each one of these employees' time towards each contract and the cost. And by doing that, we put that into a spreadsheet, but it took a lot of time. What you're seeing here is just 4 employees. And if we had, you can imagine, if we had 10, 20 employees, using this spreadsheet is going to be very time consuming. And the more employees that the government contractor would add to their team, the more time consuming this spreadsheet and these formulaic allocations would take. Another additional issue with using a spreadsheet is that there's a high room or high margin for error. You can imagine that there's multiple payroll periods in a year. So if we're doing this for each payroll period and we're using multiple spreadsheets or multiple tabs, there could be big issues if all of a sudden throughout the year something happens to one of those spreadsheets or one of those formulas inside those tabs. Just one mess up could mess up the whole labor distribution total or summing for all those employees or any employer or any contract. And it can create, for example, an issue with the DCAA auditor, because the DCAA auditor wants to be able to tie totals for a certain amount of time or for a year for each employee if they need to, based on the way they sample, and make sure that those totals in this labor allocation report ties to the general ledger in QuickBooks or any accounting system they're using. And here, it automates this process in seconds. Once I look at this journal entry and I'm good with it, I can go ahead and post the journal entry in QuickBooks. So I'll press that here. Now it posted the journal entry, and I'll click in the journal entry section here, and I'll go look at that journal entry here. And from there, I'm able to click on this link here, and it will go directly into QuickBooks and show me that journal entry right here. Again, another manual process that could create issues. This gets automated directly from WiseCost. Once that looks good, I'll go back to that profit and loss, and I'll go ahead and refresh the profit and loss report by contract, and you'll be able to see that direct labor has been allocated directly from WiseCost based on the employee's time allocated to the contract, as well as indirect labor has been allocated to the indirect labor columns here, such as G&A labor, overhead labor, and PTO. Now, this is good, everybody. This is progress. However, it's not enough. First of all, let's talk about these contracts. You can see in contract 1, I know how much revenue it's making. I know how much direct labor or direct expense it has, and I can see gross profit. Good. However, what I'm not seeing here, and what this discussion has been building up upon, what Sarah and Alfonso are speaking about, is being able to allocate indirect costs directly to these contracts. Unfortunately, QuickBooks does not do this. However, WiseCost does. And that's why we're talking, when we talk about using chart of accounts and understanding cost pools, we can create indirect rates by assigning these chart of accounts to a pool and eventually allocating indirect costs to contracts. Let me show you how. This is the account section in WiseCost. And you can see on the left-hand side are accounts from the chart of accounts directly from QuickBooks. Here are the account numbers and the type of accounts that the accounts are represented for. On the right-hand side are roles, and these are the pools that Sarah has been speaking about. If I click here, you can see I have a revenue pool, a direct labor pool, a fringe pool, overhead, G&A, and BNP, bid and proposal, and facilities. From these pools, I can assign each one of these expenses to a pool, and that will allow me to create, or allow us to create, the indirect rate calculations, which I'll talk about shortly. You can see, like Sarah was speaking about, like a retirement or health insurance, like this one is a retirement 401k, and you can see it's been allocated to Fringe, because that most represents a Fringe pool, a Fringe expense. So once I've assigned all of these expenses to a specific pool, I'm able to go to the report section here and able to generate or calculate indirect rates. First, let me just speak to you about this report section here. There is a labor distribution section. So as I was speaking about, where we would use spreadsheets in the past to allocate people's pay and their salary cost to a contract, this labor distribution can automatically do that. So this is almost like this is almost like dessert for a government contractor, or not a government contractor, from a DCAA auditor, to be able to look at this report and look at any time period what employees have allocated their cost to contracts or indirect labor cost categories. The indirect rate report here is going to calculate the indirect rates. I don't really want to go deep into this because this could be a whole nother presentation, but I'll explain indirect rates shortly. Indirect rates are simply a way to allocate indirect cost across contracts. The rate is calculated by dividing the total indirect cost, or cost in a cost pool, such as fringe, overhead, and G&A, by its allocation base, which is usually direct labor or labor. Once you have that rate, you simply multiply it by each contract's direct labor. The more direct labor a contract has, the more indirect cost it receives. It just makes sense because this is a calculation derived by direct labor. And this makes sure that indirect costs are allocated fairly and consistently. And this is exactly what DCAA wants. In other words, an indirect rate is simply a multiplier that allocates indirect cost based on direct labor. Let me show you more granular allocating indirect cost. I'm going to go to this other report called the P&L by class. Now in here, I can choose a date range. So I chose January 1st to March 31st, the same what was in QuickBooks, the QuickBooks. Now, there's also something called provisional indirect rates. Provisional indirect rates are estimated indirect rates used during the year because a government contractor does not really know what their actual indirect cost will be. These are estimated rates are commonly used on cost reimbursement contracts. So a government contractor can bill the government for the work is performed, and at the end of the year, it can calculate its actual indirect rates and compare its indirect cost to the actual cost that it's been quested upon on a cost reimbursable contract. So I won't discuss this much further. However, if someone has a cost reimbursable contract, this can be very useful because it will allow them to compare what they've already agreed upon with the government and compare it to the actual indirect rates that are created from the actual indirect costs the government contractor has. So I could include that if I want to here. What I'm going to discuss here is the actual indirect rates calculated and the actual indirect costs that are going to be allocated to the contracts. So I'm going to choose this option here where it says calculated rates based on the report date. So the report date is January 1st to March 31st, as I said. So I'm going to go ahead and run this. So when I run this, you can see the first part of this report is exactly agreeing to what's in QuickBooks. You can see if I spread this out, it has contract revenue up top, direct labor, or direct expense below it, and it calculates the gross profit. However, as we spoke about, it doesn't show truly your profit and loss by contract because it does not allocate indirect cost over here on the right-hand side, such as G&A labor, indirect expenses, overhead labor, PTO, etc. But if I scroll here below and I condense this, you can see below on the second part of this report, it does allocate indirect costs to the appropriate contract by the indirect rate, which we've already set up by tying our expense accounts to a correct related pool. Now, this is what DCAA is asking for. As Sarah spoke about when she first talked about the recap of the last presentation about the form SF1408, the DCAA wants you to be able to allocate direct costs and indirect costs to an objective. And this is what this wise cost can do. Now, when something before indirect costs were allocated, you can see these contracts, for example, contract 1 was profitable. Oh, okay, we're doing good. However, once indirect costs are allocated, you now see what you call fully loaded profit and loss by contract. And you can see, unfortunately, this contract is not doing well. It's losing money. So not only are you being DCAA compliant with the functionality and wise costs in QuickBooks, but now you have business intelligence here. You have insight as someone who would run a government contracting organization and go, okay, I truly know how much profit my contracts are making. And this can allow a government contractor to make better, more informed decisions, such as, should they move away from this contract 1? Should they renegotiate this contract 1? Or maybe they can allocate the resources to these contract 1 to contract 2, which is profitable, and maybe even more towards contract 3, which is much more profitable. So you can see from the allocation of indirect costs to the contracts directly, you're able to get business intelligence and hopefully make better informed decisions. I'm going to go ahead and stop presenting my screen and just conclude with this. It's clear how important it is to have a good chart of accounts and to understand how to assign related expenses to cost pools. This allows a government contractor to allocate direct and indirect labor, as well as other expenses, while remaining DCAA compliant. It also, as you see from the reporting, it provides insights by showing the true profitability of each contract, helping management make better and more informed decisions. Thank you. I'm going to pass it to Alfonso.
Thank you, Brian. Thank you, Sarah. That was super clear and useful. So we review basically all the critical aspects of a chart of account. We first start with Sarah, understanding what a chart of account is. We saw the different tools that we use. And then with Brian, we saw a practical demonstration on QuickBooks and Wisecost to understand how we can use those tools to calculate indirect cost and allocating them in the different contracts. So we are going to end making some short announcements and opening a space so you can make questions if you have them. Let me share my screen one more time. Okay. So before opening up for questions, I want to make sure that you leave today with something you can actually use. That's why we are going to share with everyone this chart of account. Is the same chart of account that Sarah used as an example and that use screenshots in the presentation. It's a 147 account CPA reviewed. It was in fact reviewed by Wendroff Associates CPA firm, and they use it currently with different cases. We are going to give it up for free, so you don't have to start building this from scratch, and you can start from a structure that already works. Also, I want to tell you about our next session. So on August 6th, we will have our third session on how to survive a DCAA audit. So we'll walk through a step-by-step checklist on what auditor actually ask for, what you need to have ready, and the common mistakes to avoid. So if today was about setting up your books in the right way, the next session is going to be about being ready when the auditor shows up. So I want to thank you again, Brian and Sarah, for this great presentation and demonstration. And I will go to the last slide, which is a Q&A. So please, if you have questions, you can put it in the chat. I already have some of them that were sent by email, but please send more questions if you have them. I will go ahead and read the first one that I have it here. It is, I'm already using QuickBooks, but my chart of account isn't set up this way. How hard it is to switch to a DCAA ready structure. So this government contractor has already a chart of account and they want to move to a correct DCAA compliant chart of account. How difficult it is? You want to take it, Sarah or Brian? I can't listen to you. I don't know if it's my problem or.
Hello. Sorry, I think I was on mute. Yeah.
Okay.
Definitely, I can answer that question. So, I mean, basically, the chart of account, the DCAA compliant chart of account that we are going to share with all of you is a QuickBooks import ready chart of account. So basically, the structure or the configuration is good enough to be directly imported into your current QuickBooks file. That is a super easy and quick process. And then once you import all those accounts, you will have two options. Either it's just to start fresh to using those new accounts and maybe just to delete the old accounts from QuickBooks, or the other option is you can merge your existing account to the new DCAA compliant chart of account. Let's say if you already have a travel, you want to make this travel to be under the G&A travel category, you can just rename it and then merge the account. Also, that process will probably take, I would say, maybe a couple hours depending on like how many accounts you already have, but it should be a straightforward process. And definitely, you know, we are happy to assist as well with having your book set up to be DCAA compliant as well.
That's great, Sarah. Thank you for the answer. I have one more question. Please, if you have any other question, this is the moment to send it over. So my second question is, if an employee splits their time between a contract and an indirect pool, how does that actually get recorded? Does it have to be done manually? So this company or this person is asking if an employee splits their time. We spoke about this in this and the last session in a contract, but also in an indirect cost pool like administration. How should we split this time? Brian, maybe you want to reply this?
Yes, thank you, Alfonso. No, it's a great question. And this is one of the reasons we created Wise Costs, because Wise Costs is a time entry tool, and you can choose the contracts that you spend your time on, as well as indirect costs such as general administrative, fringe cost, the bid and proposal costs. And when you put your time in those different sections, the Wise Costs will automate your cost between how much time you spend in those sections in the pay period and allocate it accordingly and automate it and put it directly into QuickBooks.
Okay, great. Thank you, Brian. So if there is no more questions, I will thank you all for coming here. I hope you return in our third series. Thanks again to all of our partners, to Dunbar Consulting, to Wendroff Associates, to Station DC, to Wise Cost, and to Mission Cultivate. And see you then.